connected. And yeah, glad to have you on board. I am going to start by introducing myself while people are connecting. And of course, this will be watched by many other people on different platforms all the way across the world. After this, a lot of people do connect afterwards. So let us get right into the introductions. The other week, somebody asked me why I didn't introduce myself, and it's because they had connected a little bit later. I'm just going to adjust my lighting quickly, and then we're going to begin. Okay, I hope it is slightly better. So welcome to the channel. Welcome to those of you who are just joining us. The name is Carol, and I am your tax attorney, tax practitioner. I am also a professional accountant and a corporate governance specialist based in Johannesburg, South Africa. And I'm coming to you live with all your tax and accounting formulations and everything that you need to make your business successful. On this channel, we discuss tax and accounting matters. We also discuss business, we discuss finance, we discuss profits. Thank you to those of you who are greeting. I can see you are on. I can see you are connected. Thank you for connecting. Please do like as well so that we can go far. So those of you who are connected, I've already made my introductions and some are still to come. Maybe what I'll do is give it just a few more minutes and then I will connect. So we deal with clients from different spheres of influence. Let me just straighten my camera a little bit because it looks like it's not straight. We deal with different clients. We deal with SMMEs, which are small and medium enterprises. We deal with some nonprofit companies. We also deal with big corporates. We deal with partnerships and individuals, but mostly tax and accounting. So that is the gist of what we do. So I am on this channel to educate you, to help you, to ensure that you run your business in the best way possible. You make your profits. You're able to stay aligned with the Revenue Authority. You don't suddenly get a nasty surprise, which is happening a lot these days. And we're also looking at things like compliance. So for those of you who are joining us for the first time, maybe you've never been on this channel, that is mostly what we deal with, tax accounting. Now, even though I'm based in South Africa and I will deal with SARS matters, I will also be dealing with general matters that can be of interest to any business person, anyone across the world. Because, hey, let's face it, profit is profit. Whether you're in the northern hemisphere, the southern hemisphere, whether you're in Australia, everybody's in business to make a profit. Everybody works for a company and wants to be able to get a salary every month. They want to be able to know that the company, the employer, will remain there for the entirety of the time that they are working there. So I think we can start now. We have 11 people connected. So hi, everyone. Hi, and the name is Carol. To those of you who missed the introduction, Tax and Accounting Matters is what we do. So I am going to start off by telling you the topics we're discussing for the next 30 minutes. Can I have your attention, please? We're going to be discussing tax and accounting matters. Now, some of this may be basic, some of it may be simple, some of you may already know some of this, but there will be some things that you definitely will learn and will be reminding you as well of certain things. So I want to talk about some of the sort of rarely discussed tax types today. I want us to talk about, okay, we're going to start with VAT, which everybody knows about, but I'm going to go at it from a slightly different angle. And then I'm also going to talk about what we call dividend tax, something that very few people know about. And then I'm going to talk about some of the things that you need to, pitfalls, let's call them that, or things you need to look out for whenever you are doing your financials, or whether the company is doing financials, or whether you need to assist in the production of financials. Because remember, it's all networked together. Whatever you do in your little corner, whether it's bookkeeping, whether it's filing, admin, whatever you do, it all comes together to be able to give a set of financials, submit returns, and for the company to remain client. So I'm going to go back and talk about VAT. I think we've talked about VAT in the past, but like I said, I'm taking a different turn today. So VAT is actually value added tax. And in the past, it used to be called sales tax. Some people still call it sales tax, but it's not called that anymore. So in this country, VAT is at 15%. And it used to be 14%. So you will find that if you are doing a VAT return from several years ago, you will have to stick to the earlier percentage, which was 14%. We all know that before the budget was announced, there was a motion table to increase it from 15% to even 16%. But unfortunately for them, and fortunately for us, that did not go through. Therefore, VAT has remained at 15% for a number of years now. Now, there's a reason why VAT is so important, because that is the route through which let's just say governments all over the world collect income. And remember, even if you're walking into a shop and you're buying goods, you're still being charged VAT, but you don't claim that VAT anyway. There are certain goods, most of you will know, that are not liable for VAT, and we call them exempt goods. We also have different categories. So you'll have certain things like fuel. If you're buying petrol at your service station, they're not going to charge you VAT, okay? And then you will have like certain food items that are basic commodities, and they are not VATable as well. No VAT will be levied on those. And because it would make them too expensive for the ordinary person to be able to afford. Therefore, those are completely out of it. From a tax point of view, a bookkeeping and accounting, a VAT submission point of view, you as the business owner, if you're VAT registered, you cannot claim VAT on certain items, even though you are VAT registered and you're being charged VAT. Things like entertainment. Right? You may be providing entertainment, you may go to a restaurant, you may buy food and you're charged VAT. Unfortunately, you will not be able to claim that VAT when you do your VAT return. The other one that you need to be aware of is, for instance, if you're providing transport, say you're a transport provider and you're registered for VAT and you're carrying passengers, right? Maybe you're carrying passengers, tourists, or just generally your buses carrying people and you're charging someone. I have a client who has a contract with a mine and they carry their staff from the mine because it's out of town and take them home. So they charge for that. Now, if you're VAT registered, that kind of transport, you're transporting humans, you cannot charge VAT, because what's happening is government authorities are trying to make it affordable for people to pay for transport. So the other one is schools as well. You'll notice for school fees, if you're a school and you're charging school fees, you will not add VAT on that. I know a lot of private schools, private institutions look for ways to charge VAT. The other one that you also need to know is, for instance, if you're a nonprofit company, you're a church, and you have a VAT number or you're registered for VAT, you cannot actually, say that we're going to claim VAT because the tithes that are coming in, the offerings that are coming in, you're not charging VAT. So you can't charge VAT. So there are a lot of exceptions. Let's put it this way. There's a lot of exceptions to the rule. There's a lot of people that would love to charge VAT, but they cannot. There's a lot of people that would love to claim or reduce their VAT, but they can't. Remember as well, one thing that I come across a lot in practice is a lot of people, they will have invoices that they want to claim for VAT, but you find that the invoices are not in the name of the company. For instance, I had the other week a client who is buying and selling cars. So when he buys his cars from the auction, he is not registered at the auctioneers in the name of his company. The auction is still recognizing him in his personal capacity. So the invoice is coming through from the auction in his personal name, and he wants to be able to claim the VAT or reduce his VAT by introducing that. Now, that will cause a problem. So what I've advised him is you need to go back to the auction house and ask them to create a new profile for the company, give them the VAT number, and let them redo the invoices if they can. Now, that sometimes is a problem if you've already waited a couple of months or years, because they've already submitted and they've done their own VAT return based on that information of you as an individual. So now they don't want to go back and redo those VAT returns, because guess what? If you revise any return, whether it's VAT, whether it's income tax, you are opening yourself up to an audit and to scrutiny. So make sure you do things right the first time. Another thing that you need to know, when you submit your VAT return, also try and make sure that you've checked and double checked and you're happy with it, and you are not going to have to need to revise that return or correct that return. Because when you then try and go back and review the return, there are limitations. For instance, you cannot increase your input tax. What is input tax? The input tax is the VAT that you're claiming. So in other words, remember the first part of your VAT return, you're simply saying, I have charged companies A to F, let's say, for instance, 114,000 in VAT, but I've also been charged as a consumer by my own suppliers 10,000. Therefore, I am paying the VAT, which is the net of the two, the 114 less the 10,000. So I'm only paying 104,000 in VAT. But if you then realize you've made a mistake and you want to go back and try and amend that VAT return, SARS will not allow you to increase what you are claiming on the VAT side. So in other words, if you say, oh, I had only put in 10,000 that I've paid out to my suppliers, it turns out I've paid 12,000, they won't allow you to increase that. They simply want you to get it right the first time. Because remember, the higher you're able to claim from them, the less you're paying them. So it does not work out in their favor. So they won't allow you to increase your input, but your input VAT, but they will allow you to increase your output or decrease your output. So you can do an amendment where it's just your VAT on sales, which is what we call input. However, should you make that adjustment, just be prepared, because 9 times out of 10, you are now opening yourself up to an audit. Because you've revised the return, SARS will now want to know what was the reason, why did you have to revise it? They'll want to now see your supplier invoices, your customer invoices. And for some clients, they're running like a shop, so they're not necessarily invoicing their customers. All they have is maybe a till slip or a record of the clients who are buying from them. Now that becomes a bit of an inconvenience because you don't have customer invoices. They're small amounts. People are coming in and buying from you, or you are just receiving funds without doing customer invoices. That then becomes a problem, because now you can't really justify the revision of that VAT return. SARS is wondering, why did you revise it? They want to see your customer invoices. You don't really have them. So here's what I'm saying. Try and make sure that your VAT return is correct the first time, so you don't have to adjust it and you don't have to justify yourself. Okay. I think I've done a video. If you will check, one of the things I forgot to say is on our channel, we have many other videos. We have shorts. They will give you a lot of information. I've also talked about what SARS calls fraudulent returns. So in other words, if you know that your sales, for instance, have been 5 million, but on your VAT return, you deliberately go and only put 2 million so that you reduce the VAT you'll have to pay in. SARS calls that a fraudulent VAT return. So in other words, you've understated your sales, your output VAT, so that you can pay less. If that is ever picked up by SARS, guess what? You will definitely, it will not end well with you, because remember, they can see from your bank statement how much money has come in. Also remember that the other person that you are charging VAT, they are going to use your invoice that you've charged them to go and claim their, or at least reduce their VAT that they're paying on the other side. So SARS gets to see someone using your sales invoice to reduce their VAT. But you yourself, the person who has charged the VAT, haven't actually submitted and paid that VAT. So this is where the problem comes. And so much in the last 2 years, I've seen SARS actually identifying and saying, hello, you have not paid VAT for an invoice that you sent through to person B. Let's just say ABC Motors. You charge them VAT of 600,000. But when we look on your VAT return, it doesn't look like you've included that. So this is where now the problem comes, is that they can pick up if you decide to leave out certain things or to under declare your VAT, they can pick it up. We had a situation just the other week where a client had not been submitting their returns for more than a year and a half, but because they were charging somebody VAT, that particular entity was using the VAT that they were being charged to reduce, and rightly so. So they were using those customer invoices. On their side, it's a supply invoice. They were using it on the input tax side to claim and reduce their VAT. And guess what? That then raised the question, because now SARS is saying, on the one side, someone is using your invoice to claim, but on the other side, we don't see you submitting a return at all. We don't see you paying us our VAT that you owe us. So of course that caused a problem, and they then assessed and they said, as far as we are concerned, you owe us this VAT because you did not submit, but someone else is using that VAT to claim. So be very careful. There are ways in which SARS can track. If you are charging someone VAT, please make sure that you are submitting that same VAT. The other thing that I need to warn people of, VAT is very different from income tax. When you register your company, you automatically get a tax number, but you do not automatically get a VAT number. VAT now is a different step. You now have to apply for a VAT number and register it. And for companies, all VAT numbers start with 4. All income tax numbers start with 9. So you can always tell which one is VAT and which one is income tax. I get a lot of people coming and saying, what's my VAT number? And I have to tell them, no, you're not registered for VAT. You're only registered for income tax. Therefore, you can't submit any VAT return. One other issue we had about maybe 6 to 8 months ago, a client that a company that we registered, she was under pressure. Her customer was saying to her, I need you to charge me VAT because we only deal with VAT registered entities. And she bowed to that pressure without consulting us, without registering for VAT. She just charged the client VAT. Now, that is definitely a no-no. First of all, it's illegal because you're not a VAT vendor. You don't even have a VAT number. You're not supposed to be charging VAT. Secondly, where are you going to, the VAT that you've collected from your client, how are you going to be able to pay it over to SARS when you're not registered as a VAT vendor? So already there's an imbalance we can see. Besides the fact that it's illegal, you're not allowed to charge VAT, it also means that you won't be able to then pay that VAT over because you're not registered. So I see someone saying how to cook the books. No, we're not cooking books here. We are teaching people to be compliant and to do the right thing. We're teaching them to stay out of trouble, helping them to make sure they do the right thing. But thank you for your comment. Totally appreciate your comment. Back to what I was saying. So on the VAT side, I think we've covered most of what I wanted to discuss today, which is the fact that you then need to make sure that you are paying over the VAT that you are charging your client. Of course, you can offset it. You do not pay the gross amount of VAT that you've charged. You are allowed to offset it. And remember, I said it's not every single sale that is subject to VAT. There's also things like rentals, certain rentals, residential rentals, commercial rentals. You need to just check and make sure that you are allowed to charge VAT. It's not all rentals that can be subject to VAT. Okay, then I also have issues of people who do events. If you're doing events and you are serving food, for instance, at the event, you, on your invoice, do not charge VAT on the full amount. I think you've also seen even on air tickets, not the entire invoice is subject to VAT, right? It's not everything. It's the same if you're going to take a loan. So you can imagine for the person that is providing loans to you, if you borrow, for instance, 500,000 from someone, they should not be charging you VAT on the full amount that you have borrowed, but just on the admin fee. That is their sale, they can charge VAT. So, okay, someone is asking me, so these operations are exempt from VAT. Yes, so certain operations and certain companies, the services that they provide are completely exempt. For some companies, they could have a combination where in your VAT return, you now need to split and say this service is subject to VAT and this service is VAT exempt. I will, I think on my next because I only have 30 minutes here, so I won't be able to go through and say to you, these are exempt and these are not. I will send you a list, and I think on my next broadcast, I will send you, or perhaps I'll just do a video and just say these are the exempt sales and these are not. That'll guide you and help you because I see it causes a lot of confusion with clients. So basically, you need to just be able to know what is exempt and what is not. Also, things like rates. I know it seems ridiculous, but rates directly from City of Joburg, they are also VATable. If you look at the invoice, you'll see you have been charged VAT. Same with electricity and water. There is VAT on all of those, even though they seem like basics, but they are actually subject to VAT. So please always check, and you must know what is VATable and what is not. You must be able to clearly enter on your VAT return. Of course, we've talked about export sales in the past. We've talked about the fact that those are definitely not VATable. So you need to also make sure that you're not charging VAT to your export clients, and on your return, you're showing it as such. If you are called upon to then defend or explain why you've not charged VAT, you must have proof. If you are providing a service, you must have at least a contract that shows that your client is overseas or outside of South Africa. And your invoices must also show clearly who you are charging VAT and why. Okay, so I'm going to move on to dividend tax now. We only have a few minutes left. Dividend tax, what then happens is in a company, if the company, and remember, there's a very strict law around this. You can only pay out, or we call it declare and pay out dividends if your company has actually made a profit. So the Companies Act does not allow you to pay out dividends if you are in a loss-making position. So if the company then finds that they've made a profit, they would need to prove that when they did the financials, they saw that they had made a profit, or even management accounts. They saw that there was a profit made in the business. And I think by now, if you've been following us, you know the difference between a profit and sales. So if you've actually made a profit after all expenses are considered, then you can declare, we call it declaring a dividend, and it's only to shareholders, remember, not to management or other people. That can be called profit share. When you're now paying those that are not shareholders, you can call it profit share. But if it's just for shareholders, it's called a dividend. You would declare it and then you pay it. You are allowed in the prior year to put it through as a provision because perhaps it relates to the prior year transaction. So you can put through a provision and say, well, I think we want to be able to pay 500K to each shareholder. Let's enter that in the books. Remember, you want to be able to say in the year end that you're dealing with, these are all the expenses. You don't want to now enter those expenses in the next year because it then skews things. We are no longer now holding ourselves accountable by having the expenses shown in the same period as the profit and the income. So the whole point is to have everything shown in the same accounting period. Going back to the dividends, remember, dividend is subject to tax. In this country, in South Africa, it's 20%. That is the tax, and it's a fixed percentage, just like company income tax. But before the dividends are actually received by the recipient, by the shareholder, you withhold that tax. So you deduct that 20% and you only pay them the net, much the same as we do pay as you earn on pay slips. So somebody just gets the net effect, which is, I guess, simply put, 80% of the amount that has been declared. So the company now needs to submit a dividend tax return on their side and explain who received the dividend, when was it paid, what was the gross amount, and pay over that dividend tax to SARS on time. The person who's receiving the dividend on their personal tax return, they will have to declare that they receive a dividend, but because they've already paid the tax, they are not going to suddenly be owing SARS because the tax has already been withheld, it's already been paid. It's the same with things like interest received in your personal capacity. I had in fact, I've had several instances of clients who are keeping huge amounts in their savings account or in the high interest earning investment account. If you're earning interest, now remember, SARS has a cap where they say interest is tax-free, but only to a certain level. Again, all these technical amounts, I will send them through later. I just want to get through it for now. So it's a very small amount. I think it's about 23,000. It does change from time to time. Once you exceed that amount, if your interest is higher than that, you are going to be taxed on that interest that you've received. I know their mouth is wide open. Why am I being taxed on the interest I'm receiving? Guess what? SARS views your investments or your savings as a business. So it's almost like you're buying shares, but in this case, you're just leaving your money dormant in a savings account. But the interest you are earning sometimes can be in the millions. I have a client who just in 1 year, in interest alone, they earned over $1 million. So you can imagine that means they must have invested in their bank account several tens of millions for it to generate that much interest. Now, unfortunately, tax is charged on that interest, not on the capital amount you've invested, but on the interest that you are earning. So automatically, when you're filling your personal tax return, you would need to be honest and make sure that the interest that you've earned as per the certificate from the bank is correctly shown, and you pay the tax on that. Now, unfortunately, if you find you've been auto-assessed and maybe for some reason SARS has not picked up your interest, you need to go back and correct that return and show the interest and pay the tax. If you don't and they pick it up, guess what? You will only be penalized for failing to disclose that you've earned interest and paying the tax. So generally speaking, make sure that if you have interest that you've earned and it's above a certain limit and the tax is due, you pay it. Guess what? Remember, we've talked about provisional tax in the past. The fact that SARS isn't waiting for your money to actually actualize and hit the account. They need you to do an estimation for 6 months and for 12 months, which is what we call the provisional tax return. So if you know that as an individual, you have a lot of interest that you're earning, and you know that you're going to be most likely paying the tax. Remember, there is a cap, so you can already tell. Also, you can look at last year. If last year you earned 50,000, 60,000, more than that, then you know you paid the tax then, you'll be paying the tax again in the next year. So make sure that already on your provisional tax return, you have declared that interest and paid for it in advance, the tax on it. Don't wait until your actual income tax return, then you suddenly remember, oh, I have interest and I haven't included it, because you will be penalized for under declaring that interest. So what generally tends to happen is people only remember at the end of the year when they're filing their tax return. It's the same with the companies. People sometimes don't realize that they're going to make a profit. So when they submit their provisional tax return, they submit it as a loss-making entity and they don't pay the tax. When you are now doing your actual income tax return, you then discover, oh, my financials are done. I've actually made 800,000 Rand profit. Therefore, I must pay the tax. Because you didn't pay it on the provisional tax return, you will be paying an underestimated penalty, because you're underestimated, and you'll be paying much more. So it's better to actually pay when you're submitting your provisional tax, declare and be clean up front, than for you to wait until that you submit your tax return. Someone is asking me a question: how much the percentage of legal reserve? What do you mean by legal reserve? Please just clarify there. How much the percentage of what? So dividend tax, we said is 20%. VAT, we said it's 15%. If you're talking about the other tax that I've mentioned now, is tax on you personally for things like your your interest. Is that what you're asking about? The one and only 2026, please confirm so I can answer your question. Otherwise, you can still leave a comment and I will respond to you. Maybe that's best because I can see we are running down. We only have a few seconds left before we get to 30 minutes. I will answer your question. Put it in your comments and I will respond. Otherwise, thank you so much for joining me. It's been fun. It's been great. I've thoroughly enjoyed your interaction, your comments, and please have yourself a wonderful day. Remember, on this channel, Tax and Accounting Matters, please like, please share this with someone who can benefit, and please catch us on our next one. So every Thursday we are on at 10 a.m. I hope those of you who are attending, you are learning. I see someone who said thank you for the lovely lesson. You will learn. I mean, if you connect all the time, we'll try and cover all the different areas. So have a good one and enjoy. Please like this and be a part of our community. Subscribe, hit that button there and subscribe, comment, and be a part of us. Lovely being here, and enjoy the rest of your day.